Welcome back to this week's Member Town Hall. For those watching on YouTube or listening on the podcast, appreciate you tuning in. Looking forward to getting into the weeds with members as well. Thanks for joining us live to break down the week that was in crypto. We've seen a really some soaring prices this week, so looking forward to getting into the reasons why that might be the case and whether it's sustainable, and then as well some of the major news updates. So yeah, we'll kick things off. Nick, how you going?
Yeah, good. It's we think Bitcoin's hit July highs from 2022, so good start to the year.
Sure is. And Leon, how's things?
Yeah, it's looking good so far. Just as Nick said, the price of Bitcoin has been going up a little bit, so sentiment is slightly increasing here and there. But for me, of course, as I always say, it doesn't matter if I go in 100K, 200K, 25K. It's okay. It's still around.
Yeah, absolutely. I think my prediction is between 20 and 30,000, like for all of 2023. So we're in the second month and we're already about halfway in that range. So no complaints if it goes higher though. But it has surprised me to start off. So yeah, we'll kick things off with a bit of a market update. And yeah, as Leon just alluded to there, prices have been soaring. I think Bitcoin touched 25,000 yesterday, US, which is highest since July. ETH is creeping up, I think, above 1,700 it got yesterday. And then market cap for all of crypto got up to about 1.1 trillion, which, again, the highest it's been in a long time. Even just in terms of just NFT market, that's been the most activity daily yesterday in about 9 months. We've seen updates as well on the macroeconomic side. We saw inflation come in once again. I think it was the 7th month in a row in the US that it's fallen, still extremely high at 6.4%. So that's worth keeping in mind, but it was around expectations, more or less, where it came in at. So all eyes continue to look at what the Fed's going to do next. They're not meeting until March 21st, I think, so quite a while. And in that sort of meantime, the markets have kept sort of rallying higher, particularly crypto. So it has been a big week. We will sort of just caveat that a bit of sort of this time we spoke last week, markets were kind of panicking and selling off quite substantially, and that was in response to regulatory news with Kraken that we discussed. And then we saw markets sort of struggle still over the weekend with this more news out of Paxos, and some more, enforcement action on Paxos over there. So I'll hand it over to you, Nick, just to break down what happened.
So the Paxos news impacted Binance, basically. There's a lot of rumors that Paxos and some other stablecoin issuers were going to be handed some notices by US authorities. It come out that at this stage, it's just Paxos, which issues the Binance USD stablecoin. So at this stage, it looks like there's no effect on major players such as Circle, which a lot of people were questioning about. At this stage, it kind of looks like it's mostly geared towards any Binance connections. So that's sort of good in a way. As long as I think Binance is the main target here, I'll be pretty concerned if this spreads to other big institutions like Coinbase or, as mentioned, Circle. Once these stablecoin issuers are targeted, then I would really think the market might start to turn and not be able to sustain the current rally that we have. Because as we mentioned, Bitcoin hitting, I think, 8-month highs through a lot of enforcement action.
Yeah, it's almost, I think the market got spooked initially. There was concerns even from members holding BUSD. What do I do? Just a reminder for anyone listening or watching that, you do have at least until February 2024 to convert your BUSD into either another stablecoin or even just to cash it out into fiat currency. So that was, a bit of panic there, but then the announcement came through. So it's really just Paxos is not allowed anymore to mint or create new BUSDs. That's important there. And then, I think there was a lot of fear initially, like what might happen to the other major stablecoins, Tether, USDC. Once I think everyone's sort of consensus agreement was that, this is more probably just towards Binance. I think the market almost had another sort of, bearish or sort of it didn't have any reason to sort of fear. Markets hate uncertainty. I think everyone sort of got over that initial scare, and markets continued to rally.
And just to add in there as well, maybe you can talk, Leon. We talked about like maybe the inflation before, but I know for me it was a bit of a mixed bag because we had it lower in the US, but I'm not sure if you have any insights on Australian inflation. I know the UK inflation remains above 10%. So it's kind of in different pockets of the world, we're still seeing significantly high inflation, which for me is a bit of a worry. I know there's some macro commentators out there who sort of believe that we're going to go through this cycle of high inflation. We're going to struggle to get down to that 2% inflation that's traditionally the goal. The EU put out a very funny Valentine's post. I don't think anyone saw it. Maybe we'll put it in the comments. They got mocked for it because they sort of made a joke about trying to get back to 2% inflation.
Really?
Yeah, it did not sit well. And it really shows the kind of environment we are in, that it's not trivial that we're going to get back to 2%. So, yeah, I'm not sure if you have the inflation figures for this month, Leon, in Australia.
Yeah, so I actually do have the inflation figures. It's in the chat if anyone wants to see it. We have December. This is from the RBA, Reserve Bank of Australia. And CPI, Consumer Price Index, for December was like 7.8%. And then the seasonally adjusted 6.9%. And inflation currently sits at 7.8, which is crazy amount. For me, it just makes me upset thinking my entire year, last year and the years before, working, saving all that money, I've lost 7.8%, right? And that's just 1 year. Next year, it's going to be something more and something more. And it just compounds. And after 10 years, you've lost like nearly a whole bunch of money. So I've linked that in the comments. People could go and see that. But I also wanted to touch on the Paxos and BUSD issues. I've got a couple of points I wanted to raise. So the first thing was that Paxos was supposed to be one of the better regulated stablecoin companies, at least more than USDT, right? But if the US government and SEC go after Paxos, then it's highly likely, or it's within the realm of possibility, they can go after Circle. They can go after USDT, at least way more than Circle. So I think at the moment, like, if you don't have to be in stables, don't be in stables. Like, if you have a bank account, go back to fiat if you need to, because we don't really know what's going to happen, right? They might say USDT, most of the reserves of USDT are government bonds, right? They could go ahead and seize all the government bonds, and all of a sudden USDT isn't pegged 1-to-1 with any government debt. And all of a sudden, well, we're done. Like black swan. The other small point I wanted to make was that, yes, if people have stable coins, you don't have to wait till February 24th. Go and redeem it now, or go and transfer it now into your bank account. And my last point is that not everyone is actually going to take it into fiat, take it into their bank account. Some people will realize that, hey, fiat isn't working for me. CPI numbers of 7.8. Stable coins aren't working for me. What other assets do we have that's kind of non-government related, that's like not centralized, and has been working perfectly well for the last 13 years. Ooh, Bitcoin, right? So I'm thinking there's a small amount of people that might end up just transferring all their stable coins into Bitcoin just to sleep safe at night. And that's not small points that I wanted to raise for Binance and BUSD.
It's interesting because I probably will push back on the Circle one.
Sure.
Mainly because I feel like Circle is still the most, the only stable coin that I feel confident in.
BlackRock.
Even if we saw what happened with Paxos, they're giving time for the redemptions, even on something controversial like Binance.
Yep.
And just looking at it objectively, I know that Circle and USDC is being integrated or being used by the likes of Visa, big banks like BlackRock, and big banks like the oldest bank, BY and Mellon.
Yep.
They're the I think the custodian of a lot of USDC. So in that regard, I probably feel pretty strongly that even if any action was to happen with Circle, I can't envision any circumstance where they would be so harsh, because that would just cause even more flow-on effects to the industry that would probably be worse than anything that they're trying to save. But I also remain a bit of a tether fodder a bit. I don't know. I
think we all are
concerns just because that amount of trust that is asked of us to just trust their backing is too much, similar to Binance, that I just not feel comfortable with it. So it's one that hopefully we can get more clarity on as the market progresses this year.
I fully agree with you that Circle and USDC is the safer option. But hey, who thought Paxos, similar situation as Circle, were in the crosshairs? Like anything could happen. So all I'm saying is, yes, it's a bit more trusted, but if you don't have to, don't trust them.
Yeah, I was going to say, Leon, yeah, I see your point entirely. Like if you're sitting in stablecoins, stables, and you're not earning yield on it, yeah, it's basically, I agree. I would recommend just holding fiat if you're not like using your stables for anything and you don't see yourself using it. I agree. It's more risky compared to just holding it in a bank. But so it was a wake up call for sure. And just like tying up that macro commentary, I think we've even seen like treasuries, like US treasuries. So basically the government bonds in the US. This week, the 6-month treasuries hit their highest since 2007, like the yield on them. So a 6-month treasury bond in the US is now 5.05% annual return, which is like insane. The yield on that. So again, it's just a sign that like, hey, if you need to hold, if you're like that's risk-free traditionally, it's backed by military and debt
by the US infrastructure, everything.
But that's what you're getting, 5%. So that's why I think like Bitcoin and stuff are taking off, because people they're seeing inflation in their wages. They're seeing like their real wages like falling, and they're almost seeking higher risk assets. Maybe that's why Bitcoin's been leading this rally potentially, because Bitcoin hasn't led a rally in a long time, and this week it was back to Big Daddy. Big Daddy definitely is leading this rally, and I think that's got something to do with it. In saying that, you could also then flip that and be like, well, if the yield on government bonds is this high, why not just go in there and like sleep a lot easier at night compared to holding Bitcoin?
Exactly.
So I don't know. It could just be the result, honestly, of so much money being printed the last few years, and there's just a ton of just capital
floating around. Yeah.
Probably brings us to the question, which I think a lot of members would be curious about: is this rally gonna last, or is this sort of environment still conducive in the medium term? I'm probably in the aspect that I'm not too surprised Bitcoin's performing so well. We could go lower on any black swan event or anything that the market may not be anticipating, or general sell-offs as the economy or macro conditions do play a big part. But I've always been under the impression, especially last year, that Bitcoin would hold up extremely strong in the face of regulation, because it is the highest. It's got the highest regulatory clarity at the moment. It's the only asset that regulators will actively call a commodity. And when we're facing issues with regulation, it's all about how decentralized is the crypto asset. And at this moment, I think Bitcoin, even Ether, it doesn't have that as much clarity as Bitcoin. So I'm sort of expecting Bitcoin to hold up in the face of greater regulation to come this year, which is why I feel like Bitcoin will still outperform the market throughout this year.
Yeah, well said. I tend to agree. It's been a while, but in the bull markets, people forget about Bitcoin's qualities being decentralized. But the importance of that, really, comes to the forefront in times like these where the regulators are circling and whatnot. Just in terms of, I think yesterday, Nick, there was like a proposal put forward by the SEC. Just very quickly, we did a post on Collective Shift for members earlier this week, just breaking down the Kraken and Paxos news, what it means, what you should be doing if you're a BUSD holder or a Kraken US customer, etc. Then we also just recapped the last 6 weeks in regulatory updates and enforcement actions and whatnot. And yeah, it's all coming to a head. We've been talking about it a lot last year, how much I think the market impacts. I think people underestimate the market impact on this sort of stuff. There was something yesterday, Nick, with the SEC. It's worth just maybe commenting on just for 30 seconds or so.
Yeah, this was just basically a proposal regulating the way and amounts and setting out clearer definitions of who custodies different types of assets in the market. So the SEC is looking to put out a wide range of more stringent rules based on who can actually hold different assets under what circumstances. The initial proposal looked like it was quite extensive and harsh, meaning that so only a few people could actually custody these assets. So that's one major issue there, because when you have a lot of crypto assets out there, and there's only a select number of people who want to hold them, it means that if they don't want to hold these assets, then effectively what's going to happen here. So we'll continue to see whether that's like going to be amended, what happens with any proposals like that. But that's just more gray sort of skies hovering over, I guess, thinner crypto markets.
Yeah, spot on. I think up next, just a quick update in terms of Ethereum. Obviously it merged 6 months ago, 5 months ago or so, but it's got to complete that merge by enabling stakers to withdraw their ETH. And there was another testnet sort of launched this week, and I think why does it matter? It's just that I think next month, I think if all the testnets go well, I think the sort of consensus view is that middle of next month, so in about a month's time, 30 days more or less, is where it's tracking for ETH withdrawals to be enabled. So these testnets are really, I guess, will determine whether that's going to be the case.
And the big focus there is that once withdrawals are enabled, we might see a lot of shakeup in exactly who is staking on the network, as we're seeing people move towards or away from one single actor like LitoDAO. We may see people withdraw from LitoDAO and put their stake with other staking providers like Frax Staking or Rocket Pool Staking or some of the other smaller pooled staking services out there. So we're going to see, I think, a shakeup of the stake, and I'm possibly at the conviction that I think we may see a lot more confidence now. We may even see more larger players want to stake, possibly, now that it's sort of tested and you can actually get your money out.
Yeah, this is a topic we've discussed multiple times on different town halls. So if members are interested, you can look at the timestamps from the other videos and just have a good understanding of the pros and cons to this staking and unstaking and what we think might happen. I think in the end, it'll be a non-event. A lot of people will end up wanting to stake more because it looks safer.
Yeah, that's it. I think coming up next, we've just got a bit of some updates in terms of just scalability solutions. I think, Nick, I'll just let you.
This sort of this is a thing on one of my bucket list items for 2023 was sort of heating up of this scaling wars. So we got two big names, Polygon and ZK Sync, who have both announced in the space of a couple of days mainnets for their ZK EVM. ZK EVM can be a bit of a word that is so confusing. Doesn't help, the terminology here, but it just basically means these are solutions to scale Ethereum that are secured by Ethereum, and you don't have to create any new fancy developer language to build on them. It'll make it very easy to port your Ethereum apps on mainnet to these alternative scaling networks. Whereas at the moment, we have things like Starknet, which require their own programming language to rebuild these dApps, which take it in the realm of 6+ months to really take an Ethereum dApp and make it fit for purpose on these. So really heating up here, and Polygon just continues to do really well. So I'm really excited to see them hopefully move away from their proof of stake centralized sidechain, which is currently operating, to hopefully something that is actually backed and secured by Ethereum. These are still early days though. So one thing I've learned is don't expect onboarding all at once. I think these would be a training wheel situation where they'll announce the mainnet again, slow onboarding. There may be caps, and hopefully into 2024 we can see these networks really ramp up.
Yeah, hopefully that continues to hum along and get some progress there, because definitely a holy grail sort of scenario if ZK technology in particular can really do everything that what people are saying it will. And we've seen Matic actually outperform the market in this sort of recent rally. So a lot of I think things going on with Matic to look forward to. There was this week as well, notably an airdrop of Blur. So the Blur protocol and the token, the ticker of the token is BLUR. That was a really big, that was probably on the bigger side of as far as airdrops go. It's like an NFT marketplace and also an aggregator protocol. And it's been getting it was founded maybe 18 months ago or so, but they've been publicly released for about 9 months now. So people have been sort of, quote unquote airdrop farming on them and just trading, trying to get activity on the marketplace. And finally this week the airdrop came out, and I think it's currently up about 110, 120 rank by market cap. So quite substantial there. And you really, to get that, to be eligible for that airdrop, you really just have to use Blur, basically. So we have been covering it, in other sort of town halls and in the Discord as well. I know there were, quite a few members in Collective Shift who got that airdrop just because the eligibility was pretty loose. I know personally for me, it was actually my biggest airdrop ever in my 5 years in crypto. But in saying that, that's more a reflection of me just not getting any of the other airdrops. I didn't get the uni one. I didn't get the ENS one. I basically didn't get any of them. More so just, I was a bit more, risk averse in my earlier days when it was a bit more risky going all in my career into crypto. So this one was a good to see, and it did really spur and catalyze the NFT market, which is, as I said, at 9-month highs in terms of daily volume. So that's been really good to see. So for any members wanting to, find out if they're eligible, I would just go to the Blur website, which you can just go collectiveshift.io/Blur. Then you'll have the links to the website and that on there.
Yeah, maybe the thing on everyone's members' lips is probably how to play the airdrop. Maybe I don't know what your thoughts are. I know I was kind of skeptical at some of the token distribution of it. There was a good amount for the community, I think 50%, but then we had another, I think 30%, which had quite a high team and investor allocation. So 30% there for the team, and then about 18% for the investors, and then another couple % for advisors. So it's basically 50-50 split between advisors, team, and investors. Investors, and then
insiders,
the community.
This was probably more of a generous one that I've seen compared to others. I think it was 12% of the overall supply was airdropped this week. I think it's 30% allocation in its lifetime. So I think there's still another 18% to go. So for it to be this 12% was surprised a lot of people with how much they got. So I think people are now flooding to Blur to try to get their airdrops ahead, try to qualify for their airdrops next time, because there's still, I suppose, the majority is still to go in terms of the community allocation. But big things going on in the sort of market dynamics of the NFT marketplaces. OpenSea's definitely been losing market share the past 6 to 9 months. And, this is sort of a example here where it's okay, will OpenSea want to launch a token? They've had plenty of time to do so. Now we're seeing the effects of what happens when a protocol or exchange or platform doesn't tokenize, and then when a rival one does, what can happen. But the key thing here is, so long as the product experience continues on that one that has tokenized, because looking back to Uniswap, SushiSwap, Uniswap, and then SushiSwap famously did the tokenizing before Uniswap. But we've seen since then Uniswap has still maintained a significant market share, really just because their product is a lot better, and their technology and solution is a lot easier to use and whatnot. So
I'd also say that in that regard too, I think it's a case of getting those early users who, Uniswap's a brand. People want to go to Uniswap. They know that's good. They're consistent. They go there. It's like any other brand you use. So I think that plays a big impact, and why I think OpenSea still continues to have market share even though it doesn't have a token. We've seen marketplace after marketplace launch trying to do a similar attack on that SushiSwap did on Uniswap, but we're still seeing OpenSea with remarkable market share, considering, I think, which is really cool to see. And I'm really looking forward to what is next if we do get regulatory clarity, because Uniswap, OpenSea is such a VC-backed institution that they cater to a lot of US residents that I think a token is just not even viable at the moment for them in this kind of climate. So I'm kind of wondering whether we're going to see, well, for Blur, what happens if we do see an OpenSea token in 2 years or 1 to 2 years once we get any clarity on this?
Oh yeah, actually, very like important on this is that Blur like didn't say anything until like this week when they announced the airdrop that it wasn't eligible to US users.
Yeah, I saw that.
But they didn't say that the whole way through. So all of these US investors, the NFT enthusiasts, traders, whatever, were farming in anticipation. They didn't say anything. I thought that was pretty dodgy. Like that would have hurt their brand. And I think, there was a lot of US citizens were, traveling to Canada to do their airdrop, or they were phoning up a friend in like the UK to do their airdrop for them.
Oh man.
Yeah. That's going to be really, because if you got like 50K worth of airdrop or something and you're a US resident, like you have to put that on your taxes. But then, if you don't do that, it's going to be obvious. But then if you do that, you're admitting to breaching, I don't know,
terms of conditions. Yeah.
I don't know if they're laws or I doubt it. But it's just, as you said, Nick, we need some tokenization and laws to happen because this stuff is just also cumbersome.
Gary's protecting them from the airdrops, so that's good.
Yeah.
That was the same one with DYDX. The US residents, I think, received something like the tune of $10,000+ worth of this airdrop, and they just couldn't access it. So good old Gary's stopped them from making some money.
Yeah, that's the retail protection right at its best. I wanted to say small points on what you were saying about how they practically used all the US customers, the US NFT traders, to increase the volumes, prop it up, make it comparable enough to OpenSea. And now that they've released a token, we don't want you here anymore. Go away. It's really not fair. And I also put the link to the NFT marketplace analysis in for Dune Analytics, and you can see that it's having more consistent volume than OpenSea at the moment. Like volume for yesterday was Blur is 74%, OpenSea is 18%. So this is a bunch of people that are still airdrop farming. But if this remains consistent, then yes, they will steal market share permanently from OpenSea. Something to watch out for. And I think we should do a video on Blur Marketplace. It's on my radar now. I will start putting this into production. So members, just watch out for it. But also yesterday, Matt, I was watching like a 1 hour interview with Pac-Man, the leader of Blur, with Bankless. And I went through the entire interview, and I wasn't really satisfied with his answer of what the utility of the Blur token was. Yes. So can you, from your just general research, what are we actually using Blur for? His answer was that, it's just a passive kind of exposure to the NFT marketplace. And that was it. And I was like, okay.
Yeah. The utility of Blur is pretty weak, in my opinion. It's really just, it's the typical sort of, you get like governance rights to the parameters of the fee. So like the kind of like similar to Uniswap, like the token holders will eventually like be able to decide what to do, vote on what to do with the like significant fees that will be coming to Blur's treasury.
Sure.
They'll be able to vote like, do we let some of the traders get that? Do we put that into a foundation that we use for grants?
Grants,
typically what you see. Then so again, like I think that's pretty weak because it's all forward looking and it's all based on sort of promises.
How
but
it'll go
again, in that sort of legal sort of conundrum they're in,
Security.
If they went ahead and said, hey, Blur airdrop, Blur holders are getting, the rights to get 10% of all fees, that would like be an instant like red flag, and like that would be an instant sort of like they'd be high on the watch list of like the SEC if they did something like that. Which again is this dance everyone's kind of doing at the moment. So just finally, Leon, one thing I would anticipate to kind of bolster up the value proposition of the Blur token, I would expect them to do something like a staking program eventually.
VE mechanics.
Maybe something like that where you can stake your Blur on the marketplace or on the protocol. And then there's some sort of utility, maybe a fee discount on the actual exchange would make sense. Something like that, I reckon. But again, that's why I sold mine I sold mine. We actually talked about this last week, the typical airdrop cycle.
Yep.
It's initially very thin markets.
Yep.
The market dumps by people who want the liquidity, like the price dumps from the outset. You see the smart buyers come in, and you see the smart airdrop recipients just hold because they know that this always happens.
We've done this too many times.
We've done it too many times. And
Yeah.
it comes up slowly. And then that's when I sold it that bit. So I think I sold it for a bit over $1, which I was, really surprised. I did not expect it to be, that much of like that many tokens received, because I wasn't even farming for it really.
Yeah,
but,
you're just like a typical user, not a
the
wash trader.
NFT markets are really, come back to life, but we'll see if it lasts, because they had been struggling.
So it's like the typical story of great project, great platform to do your service, but the token itself doesn't do much at the moment. Yeah,
at the moment.
Typical kind of experience in crypto and Web3 at the moment. Yeah. Anyway, we should move on.
Yeah.
Yeah, I think we have maybe one final item to maybe just talk about, which is I think in our 2023 recap, we were looking forward to real world assets potentially making their way into the blockchains. We've been seeing this step by step, this time by a German conglomerate who issued their tokenized bonds via Polygon. This is really interesting when you read the reasons why they were doing it. And they specifically cited that it was cheaper, it was easier, and more people had access to their bonds via public blockchains. So it was really cool to see them really specifically call out why they were doing it as a better alternative to what they did in the past. So this is something that I think we'll continue to see more eyes on as we head into the rest of the year.
Yeah, definitely watch that trend for sure. And then we've seen another week, another Polygon announcement with the partnering here with the creators of Final Fantasy. Leon, did you kind of see this one come through, or?
I did briefly, but I didn't go too much into it. I just always, whenever I see Polygon's business dev team making a new announcement, like, oh, you guys are killing it, keep going, like it's going and going and going forth. But then I also realized, Polygon is very, very centralized. I think you guys have touched on this before. And I'd be like, would I rather own Bitcoin or would I rather own Polygon? I'm like, okay, I'm getting more Bitcoin. Thank you. See you guys. Good job, though.
Yeah, no, well said. It's all well and good, these announcements, but until the tokenomics changes, which it's going to. I just want to cover that just quickly.
For me, it's just more something to keep in mind too is that Polygon does provide grants for game developers to build on their chain. From this announcement, I didn't see whether that was actually the case. I'm hoping if that was the case, there'd be more disclosures, but I don't think there are, to be honest. But at the end of the day, even if they are getting potential grants or services to build on them, maybe they're getting a dedicated team to help them build on the blockchain. For me, it's still an indication that one, they have the resources and the teams to onboard traditional game developers to their chain, and two, that these chains are still choosing Polygon anyway. They're not going to choose a chain just for the heck of it if they don't really believe in it as a whole, because the whole thing is security and understanding. So continue to be impressed by Polygon, and hopefully we can see them start to be secured by Ethereum, especially into next year, and then in the years to come.
Yeah, it definitely signals to me that these guys would rather build on an EVM chain such as Polygon rather than going to like Near or Phantom. None of these are really making as much headway as we'd want them to. And so it brings you back to Ethereum. You're like, okay, everyone is interested in Ethereum. Maybe there's something more beneficial there than any of these other chains. Yeah,
absolutely. For our for members tuning in, we will stay on for a bit extra as we do every week to answer your questions. But for those listening on the podcast or watching on YouTube, we will leave it there for now. So thank you for joining us. And if you did want to find out more about what we do at Collective Shift, head to the website at collectiveshift.io. You can also now, as of recently, book a free strategy call with Ben, our founder and CEO. So his calendar is filling up pretty fast. So yeah, head over to collectiveshift.io, follow the prompts, and you can book in a free call with him to work out your crypto strategy. But until next time, thanks for watching.
Thanks, guys.
See you guys.